for 2015. Also, the unemployment outlook for this year was changed to an improved 7.25% from a prior range of 7.3 to 7.5%. So there is lots to dig into here. Let's bring in Mike Santoli and Peter Schiff of Euro Pacific Capital, also the author of The Real Crash, to hash it out. Let's go with the away team first. Peter, we saw some of your notes in reaction. You are disappointed. What specifically could Bernanke have done today, realistically, that would have pleased you?
Well, he could have resigned. But I don't know that that would have necessarily pleased me because I'd be afraid of his replacement. But maybe he could have told the truth, which is something he's probably never done in one of these press conferences. But, you know, he's basing his forecast of an improving economy on a housing market that was only rising because the Fed was able to blow some more air back into the bubble. But he can't talk about tapering because he knows he can't do it. Look, mortgage rates, if the Federal Reserve does not start buying more than $85 billion a month of mortgages, we can have a 30-year mortgage rate back above 5% by the end of this year. I mean, now it's right above 4%. And by the end of the year, this whole housing mini boom could be a brand new bust because a lot of the hedge funds and private equity guys who have bought up a lot of these houses, that's what's happened. You've had a lot of speculators in the housing market. These houses are going to be up for sale. They can't find tenants. Meanwhile, foreclosures are rising now because banks got optimistic. They thought that real estate prices were going up, so now they're actually foreclosing on more houses because they want to try to sell them while they can actually find a buyer, but they're going to be very surprised that the buyers aren't there, and this phony recovery that the Fed thinks it's engineered is going to vanish right before its eyes.
Let's bring Mike Santoli in here. Hey, Mike, what do you make of the inflation expectations? It seems to me that that's really Bernanke's window to kind of stimulate as long as he wants to. What do you think?
Yeah, and if I'm reading the market's knee-jerk reaction this afternoon, it's that Bernanke had the excuse, if he wanted to take it, to actually be more dovish in his language and in his press conference by saying that inflation is below its target by so much, and yet kind of dismissing it in the statement, saying it was due to temporary factors. I do think that's one of the reasons the market's saying, hey, we were up 2.5% on the S&P 500 since Thursday's low. So clearly you built in the idea that he was going to give you more candy, not less. And he basically kind of decided to decline the invitation to be that much more aggressive. So if he basically, says, hey, Peter, you're wrong. We are actually trying to pave our way to some kind of an exit or at least a moderated form of QE, you have to believe it. And I think the market doesn't want to hear that the Fed is getting more optimistic about the economy than the market itself is right now. So that's one of those things I think the market's adjusting to. I don't think it's a doomsday, but I think the market has to adjust to the fact that the Fed means to be serious. If you take it to the ultimate, really nasty conclusion, it's that it's a tacit admission that QE hasn't necessarily created a wonderful booming economy, and we're going to back away because it's diminishing returns. Again, I'm not going there, but I do think that's the bearish reaction the market
Peter will
might
go
have.
there, won't you?
When he was asked what evidence you have for an improving economy, he based it on the housing market. Housing prices going up. And he even said it didn't matter to him if mortgage rates were rising because he thought the fact that if prices were going up would encourage more speculation. I mean, so he's basing it all on reflating a housing bubble. It's not going to work.
Well, Peter, let's talk about
the air is already coming out on its own.
Peter, let's talk about this flating idea. Isn't deflation really the Lord Voldemort of this entire thing? Isn't what Bernanke fighting against as a student of the Great Depression simply deflation? And no one wants to say it, but they go about these terms like decelerating inflation. That's deflation. And should we expect the man to do anything other than print money?
Well, first of all, falling consumer prices, which is what everybody thinks about when you talk about deflation, that's a good thing. That is the goal of a healthy economy. You want the cost of living to go down. That's how standards of living rise. But when you have inflated asset prices, if real estate prices are too high, if stock prices are too high and they need to come down, falling asset prices is a good thing if they're overpriced. What the Fed is trying to do to maintain artificially high asset prices is helping to destroy the real economy. And so you can't do that. You can't sacrifice the economy to try to prop up inflated asset prices and then claim that, well, we have to fight deflation when what they're really talking about is consumer prices. But we want lower consumer prices. Unfortunately, we're not getting lower consumer prices. I don't care what the CPI says. Prices are going up for everything that we buy, and they're going to go up even faster as the Fed continues to print money.
One thing I want to jump in here, one area where we are definitely seeing a reaction is in the mortgage applications. And just in the short term here, when we've seen that 10-year yield run up, we've seen a pure handbraking of any mortgage activity. So that's going to be in effect. And Mike, I would ask you, this is different because this is a tangible, instant reaction whereby we were wrong earlier in the year about the effect of sequestration cuts, and we were wrong, hugely wrong, about the effect of across-the-board tax increases. This one is real, and it's hurting.
It is hurting in the short term. I obviously think you have to find the real level for mortgage rates and the clearing price for these houses. I don't think actually rising house prices has to be the exact thing that you're targeting here, or at least that you're hoping for. It has to be higher turnover, take up some of the slack in the market. We'll see if it actually happens. I would go to one other strand of the Fed's projections on the economy, which also are slightly a damper. If you're lowering your unemployment rate forecast, in other words, it's a better looking prospect for unemployment, but you didn't raise your GDP forecast, implicitly you're kind of saying, well, the unemployment rate's going to come down without really an acceleration in growth, maybe not for the right reasons. Again, this is a negative cast you can put on it, but I do think it's basically saying we may not have a booming economy when it's time for us to withdraw. That's fine. We didn't think it was going to be a boom, but the market has to adjust to that
Danny
idea.
Downer there in the newsroom.
But no, the market just has to adjust to this, and it can probably deal with it if, in fact, it sees the economic data come in okay.
But speaking of data, and Bernanke himself touched on the kind of mushy nature of unemployment data. Peter, and you've talked about pricing data and how the CPI is a bunch of garbage. Is there any number we can look at that's going to give us a real indicator on this economy? Because, frankly, I'm just kind of seeing this moribund kind of economic growth plane that's asymptoting at zero. I don't see a lot of price inflation or deflation. I see nothing happening. I see Japan at worst.
Yeah. Well, I think you can look at things like the size of our debt, the enormity of the national debt, the unfunded liabilities, the growing trade
Peter,
deficit,
I don't pay that out of my pocket.
Savings rate.
Peter, I don't go to the gas station and say my sinking savings rate as a national economy is a real problem for me. I mean, I'm talking about what we live, our life.
That is an objective way to look at the overall success of the economy. Are we richer or are we poorer? Are we growing our liabilities or are we growing our assets? America is getting poorer. We're consuming our way into poverty. We're borrowing from the rest of the world. We're trying to reflate a phony economy based on asset prices like real estate and stocks. Meanwhile, the real economy continues to deteriorate beneath our feet. You can see that if you look at the real numbers. But the Fed is trying to create an illusion by creating inflation.
I want to look at the real numbers. I'm dying to look at the real numbers because I don't believe anything that I'm seeing out there. Tell me, please, and put this in the household, Peter. Let's talk, what am I bringing home here? What numbers should I be looking at to tell me about inflation, deflation, whatever's happening? Well, is it my grocery store receipt? Because that's not going higher. What I pay at the pump?
Individual households are struggling to make ends meet. Their cost of living is going up. They've had to deplete their savings just to pay the bills. Utility costs are going up. Food costs are going up, medical costs are going up, all the basic necessities of life are getting so expensive that more people can't even afford some of the pleasantries of life.
Peter,
our standard of living is collectively declining.
I hear what you're saying, and I understand everything.
There.
What number? Where? The CPI is showing really subdued inflation. Unemployment's a bunch of garbage. I just want a real number.
Look at the labor force. Look at all the people that are on disability. Look at all the people collecting food stamps. Would this be happening? Would we have almost 50 million people on food stamps if the economy was actually growing like the Federal Reserve thinks it is? Would we have record numbers of Americans on disability? This is a sign of a collapsing economy. The Fed could pretend it's growing all at once because we're measuring the economy with shrinking dollars, but the fact of the matter is what the Fed is doing is not working, and it will never work. And in fact, Ben Bernanke even said if our forecast turns out to be wrong, which it will, because the Fed's forecasts are always wrong, they're not going to admit they made a mistake.
Peter,
they're just going to do the same thing over.
What are dollars shrinking against right now? What is the value
they're
of the dollar
shrinking against all the things that we need to buy. But by the way, the dollar actually hit a 4-month low against the euro yesterday. It's rising a bit today.
The one currency you can point to. Okay.
No, I can point to the Swiss franc, or I can point to the Norwegian kroner. There are a lot of other currencies, but other central banks are making the same mistakes. They're all printing in unison, and so prices are going up. Look, there are countries now. Look, they're protesting in the streets in Brazil right now. They're not protesting falling prices. They're protesting rising prices.
Okay, Peter, I got to cut you off
people,
there.
It's only the Federal Reserve that doesn't like falling prices.
I hear you completely, Peter. Thank you so much, and I trust that you'll be angrily discussing this for months to come.